Hey guys, hope you and the families are doing well. In this video, I'm going to teach you one of my favorite swing trading setups that I call the Shakeout Demand Tail, and I'll take you through my recent trade in Oklo. Market Surge are today's video sponsor. They are my go-to resource for analyzing company fundamentals. If you're interested in a discounted trial, you'll find a link to that in the description and the comment section below. Okay, so let's start off with what is a Shakeout Demand Tail. So visually, you can recognize the daily candlestick that I'm looking for. Well, it's often a variation of a hammer candlestick, a doji dragonfly candlestick, or a Takuri line. Now I'm looking for these around specific daily moving averages. Now let me take you through some of them that we can see here on the Oklo chart. So this would be a shakeout demand tail on a clustering of 3 key daily moving averages. The black line is the 10-day EMA, the blue line is the 21-day EMA, and the purple line is the 50-day simple period moving average. So this is a shakeout demand tail that forms around a clustering of all 3 of those key daily moving averages. This one here is a shakeout demand tail which forms on the purple line, which is the 50-day simple period moving average. Fast forward a couple of bars, we can see a shakeout demand tail that forms around the 10-day and 21-day EMA and just above the 50 days. This is a 21-day EMA shakeout demand tail. If we then fast forward to my entry, which is through the high of this shakeout demand tail, and we'll come on to the order entry method technique shortly, this is a shakeout demand tail that's also an inside bar. So relative to the prior day, it trades within the range of the prior daily candlestick, and it forms this 10-day EMA shakeout demand tail. It's also a very bullish shakeout demand tail because you can see the strength of the close. Okay, see how strong the close is here relative to the day's range. It's almost going out right on the high of the day there. So for me, that makes it even stronger. If you get a shakeout demand tail which flushes down during the session, then you get that really nice strong close closing towards the day's highs. That can just make it even better. So I'd say this here is an even better shakeout demand tail relative to say this bar here or this bar here. This one pretty good as well. You can see how it's closing very close to the high of the day's range there. So I'm looking for these shakeout demand tails in leading stocks around 1 or more key daily moving averages. So that's going to be the 10-day EMA, the 21-day EMA, or the 50-day simple period moving average. Now, how do I know it's a leading stock? Well, in the prior video, I was teaching you about relative strength. I also have a free indicator on TradingView called the RS line. So that's the relative strength line. So I love trading stocks that are hitting these blue dots. What do these blue dots mean? It means the stock is hitting a 52-week high on the relative strength line versus, in this instance here, the S&P 500. So I'm looking for those stocks. What are the ones outperforming? Are they also from a specific group and or theme that is outperforming the market? Clean alternative energy stocks have been very, very strong of late. If you cast your eyes back to the 27th of January bar, you'll remember that the triple Qs and the S&P 500 on the DeepSeek R1 news were gapping down towards their 50-day simple period moving average and below, where Oklo doesn't. It actually holds around its 10-day EMA. So again, showing a lot of relative strength, which is what I taught you in my prior YouTube video. We can see the 52-week highs coming through as well. Something else that I'm also looking for, a bit of a subtlety, okay? Not only a stock displaying a lot of relative strength, but ideally I'm seeing large and consistently and persistently high daily volume coming through on the rallies. If you look at this rally in here, okay, look, you get 1, 2, 3, 4 bars in a row where it's consistently above the 30-bar average on the volume, being that black line there. I really like this. It's signaling that there is a lot of strength, a lot of demand here. We can see it over here too. So I really like looking for that large relative volume and persistently and consistently high volume during the rallies, and then on the pullbacks, look how the volume dries up. These are some of the subtleties that I really like looking for. So then in terms of the order entry method technique, there's a couple of different ways, okay? You could do a buy stop limit order. So what does that mean? Well, a buy stop limit order is simply you're targeting the stock. So if we do this one here, you're targeting the stock through the high of the day, okay, and placing an initial stop loss underneath the low of the day by cent. This is taught in the blueprint trading course. So with this instance here, with this 21-day EMA shakeout demand tail, the initial risk on the trade is going to be around about 8.5%, 9% when you kind of round this up for a little bit of slippage. Okay, you're easily going to be around like 8.5%, 9% or so. So what I would do is gauge this relative to this figure up here. Now this is the ADR percentage on a 20-day basis. So this is the stock's 20-day average daily range percentage. Now what does that tell you and why is that useful? Because it's telling you the average daily range percentage of the stock excluding gaps over the last 20 days is 14.65%. Now it wouldn't have been this high back here, but just for the purpose of this video to kind of teach the concept, okay, we'll just imagine that it was 14.65%. So what am I ideally looking for, okay, if I'm targeting a buy stop limit order. So I'm buying it through the high of that shakeout demand tail, stop loss a cent below the low of that shakeout demand tail. My initial stop loss to be around half to 2/3 the 20-day ADR percentage. So in this instance here, it's in that kind of ballpark between half and 2/3. The issue with targeting, say, a buy stop limit order through the high and a stop loss underneath the low of the 28th of January shakeout demand tail is you'll see that the risk gets pretty wide here, okay? It's about 12.18%. I mean, you factor in some slippage here, okay, you're then going to be looking at around about a 12.5%. For me, I like to keep my initial stop losses single digits at a maximum, okay? Anything like 10%, but I'm just going, no, okay? Losses work geometrically against you. The risk reward is all getting out of whack. Even if the stock has, say, a high 20-day ADR percentage, like Oklo at 14, the risk reward is just all out of whack. I like to keep it single figures and ideally low single figures, okay? So here at 12, and it just doesn't make any sense, okay? Then you can kind of tweak it and go, I still like the setup, but then you can have different order entry method techniques, such as the buy stop limit, or sorry, not the buy stop limit, or that's what we were just talking about, the opening range breakout. So then you can utilize an opening range breakout, and or you can be looking at it if the pivot is the high of the 28th of January bar, then as it starts moving through, you can visually look for, is the stock showing a lot of intraday relative strength, which is what I've been teaching you recently in some of the YouTube videos. Am I seeing a lot of strength, a lot of buying coming through? Preferably that is also showing relative strength intraday to, say, the triple Qs or the S&P 500, whatever is going to be the most appropriate index to be gauging it off. So there are some different order entry method techniques to use as well, okay? Oftentimes it is not a one size fits all is the best approach. You want to have a trading toolbox and have lots of tools in your trading toolbox to then go and use it for whatever the situation is required or whatever is most prudent for the situation, okay? So me here, okay, I get a little bit of slippage coming through. So my entry is at 34.25. My initial stop loss low of the day of then this breakout attempt bar by a single cent, that's 33.26. So then my initial risk is 2.89%, assuming I don't get any slippage when I get stopped out. Now that is very, very, very favorable versus the 20-day average daily range percentage of this stock, which is about 14%. Okay, so it's looking to keep that risk nice and tight. But hopefully there, taking you through this Oklo trade and teaching you about the shakeout demand tail, which is taught in the blueprint video on the YouTube channel for free. There's a lot of videos on it as well. If you search my channel, you'll start seeing these. Okay, shakeout demand tails, shakeout demand tail, shakeout demand tail, shakeout demand tail. I love looking for these type of candlesticks in leading stocks around one or more key daily moving averages. So I'll wrap the video up there, guys. Thank you very much for watching. Thank you very much for supporting the YouTube channel, and I'll see you in a future video.